Hey, what's up, my friends? So, welcome back to another week of the weekly market analysis. My name is Rainer, and hey, I'm the guy you see every week, right? So, for those of you who are new, right, to what I do, so basically, I'm a trend follower, right? I like to trade the trends in the market using, or I would say, reading price action of the markets, right, and capturing trends. So that's it. Each week I publish a video, right, and share with you my thoughts on the market, right? I will tell you which I think are the best trading markets and how I look to enter, exit, and manage those trades. So all in all, right, is basically, right, I would say peeping into my brain, right, and see, how I actually, trade the markets. So that's it. In this week, right, I'll be talking about gold and dollar yen, right? I'll talk to you about why I actually traded these products and how I actually went on board and entered these trades. And towards the end, right, I want to tell you as well, something equally important is that you have to understand that which markets are favorable to you and which markets are markets that you want to stay out at all costs, right? Because this is important, right? Knowing the kind of market conditions which are favorable for you and which are simply, disastrous. So that's it. I want to share with you which markets that I absolutely, right, don't like to trade in this week's market analysis. So all this and more, I'll see you there. Alrighty. So first up, right, the market that we want to talk about is gold. So if you recall, gold was a market that I mentioned 2 weeks back that I said that I would be bullish if price can take out above this swing high and above the 200 period moving average that you see over here. So the thing is this, right? I basically got bullish even before this 200 period moving average was broken towards the upside. And here's why. And the reason why is that because on a 4-hour time frame, I identified a potential trading opportunity. So what I saw was this. I saw that on the 4-hour time frame that price has been respecting the 20-50 period moving average. So bearing this in mind, I would conclude two things. Number one, this is either a start of a new trend, right? What do I mean by a start of a new trend? This would either be number one, a start of a new trend based on a weekly time frame, whereby this move over here is the start of a new trend, or number two, that this is just a retracement in a higher time frame, and that if I'm wrong, price would then retrace back lower, which would actually lead to the weekly time frame just being a retracement as well. It means this is just a retracement before price collapse lower. So I went with option number one, right? Meaning that I choose to believe that this would be a potential move higher. So that's it. At this point in time, how I got long was this, is that just because I anticipate a move higher does not mean that I would straight away get on board the trade. I would still prefer for price to lead the way. So what I did is that I had a buy stop order over here, a buy stop order above this high, and a stop of 280R. So if price were to trade above this high, then only then will I get long. So that means that while in the consolidation over here, while price is in the consolidation over here, I will not be in the trade, right? I let price lead the way, and only if it trades above this swing high, only then will I get long. So this is what I mean by, letting price lead the way. So that's it. This was something I think I shared in the Facebook group, and fortunately in this scenario, right, it seems to be going in my way for now. So this is my take on gold. And looking at the weekly time frame again, right, I have no idea whether this would be a start of a new, reversal in the markets. So it's still too early to say, but I'm currently long in gold, and we'll see what happens next. So another market that I want to talk about is the dollar yen. So dollar yen, right, we have been talking about it pretty extensively if you have been following me for a while. We said that on the weekly time frame, we have this potential head and shoulders pattern over here. This is the left shoulder, this is the head, this is the right shoulder, this is the neckline. So when price breaks below the neckline, I was bearish on the dollar yen. So on the 4-hour time frame was where my trading opportunity came. Right, we have this bearish continuation pattern, price traded lower, taking out below this swing low over here. So this is where I got short, below the low of this swing low. I got short, price went in my favor, then it traded against me, and I exited my trade when it closed above the 20 period moving average. So the thing is this, right? Just because you got stopped out of your trade, just because price hit your trailing stop loss, it does not mean that the trend is over. Okay? I repeat this once more, right? Just because price has hit your trailing stop loss, it does not mean that the trend is over. If you don't believe me, you look at the daily time frame. Does the trend look like it's over? Or the weekly time frame, does it look like, it's about to, reverse back towards the upside? No, right? It just so happened that my trailing stop loss got hit to protect my current open profits. So I took the trade, right? I exit with a small profit. And the next question that is on my mind is, how do I get on board the trade? How do I hop on board the trend once again? And this should be your thought process as a trend follower, right? Just because you got stopped out of your trade does not mean that the trend is over. It simply means that, price has hit your trailing stop loss, and if the trend is still intact, right, you have to ask yourself, where will I get on board next? And this was the question I asked myself, and I got on board once again, right, when price closed below the 20 period moving average over here. Why did I went short over here? Because I really like the price action on this instance. Because if you look at it, right, price, it tried to trade higher, 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 and the bars were getting smaller and smaller, right? And over here, it basically shows you indecision, right? The candles are so small, telling you that, the market is undecided where it wants to go. Well, it can go higher or it can go back lower. So the thing is, the confirmation that I had was when price break and close lower over here. What is significant about this is that it closed lower compared to the previous 1, 2, 3, 4, 5 candles, right? It closed lower compared to the previous 5 candles. So it is telling you that the bearish momentum is picking up once again towards the downside, and possibly just resuming the trend on the higher time frame. So on the forward time frame is where I got short, right, based on this close of this candle, stops of 2 ATR, and right now it seems to be going in my favor, right? I can't really say how far you'll go, but I'm currently, back in the dollar yen trade, right, shorting it, and we'll see, how far you'll take me in this trade. So another market that I want to share with you today is, a market that I would, stay out of, right? If you look at this chart, this is the Aussie Canadian weekly time frame. Number one is this chart clearly is not in a trend, right? Pretty much in a range bound, these highs and these lows over here. But what I want to point out to you is that you look at the wicks on this Aussie Canadian, right? The Aussie against the Canadian dollar. Look at the wicks, look at the wicks, look at the wicks, look at the wicks, look at the wicks. From a trading standpoint, or maybe a trend following perspective, this is a market that I want to avoid at all times. Because the wick is so long, chances are is that, even if I put my stop loss on my trade, it has a good chance of being stopped out because the wick, is just flying up and down. So in this instance, if I really have to trade it, my stop loss has to be large enough to compensate for this kind of a volatility, this kind of wicks flying all about. So in this instance, I would rather much, just stay out of this market altogether. So Aussie Canadian is a market that I will not be looking to touch anywhere in the near future. And similarly for Aussie New Zealand, again, similar story, right? Look at the wicks on this chart. Look at this. It's flying all around, right? Look at this. What is this? I don't think this is an error on my broker feed. I think this really happened because I checked at a few platforms, and what is this? This looked like what is this? A sword? A very long sword? I mean, wherever you put your stop loss, above here, above here, above here, maybe you put here, you're also going to get stopped out, right? So, very ugly price action, right? I wouldn't even want to stay or go near this Aussie New Zealand, right? This is Aussie against the New Zealand. Another pair I'll stay out of, right? The wicks is just telling you that, it's not worth trading, and, even if you put a stop loss, there's a good chance that it will get triggered, and price could, jolly well just go back in your favor after which. So that's it. Again, there is no trend down here. There is ugly wicks flying around. So what I rather much choose to do is just, avoid the market, right? Simple as it is, right? Knowing when to be in and knowing when to be out. All right. So that's it, right? Okay, before we conclude, right, I want to point out to you that, for those of you who are new, who do not understand what I'm talking about, I'll say get the ultimate guide to trend following. Right? I'll put a link over here, right, where you can see, right? And it's basically teaching you the essentials of trend following, how you can actually use it to capture massive trends in the market. So in it, right, in this guide, I also share with you a simple trend following strategy that you can use to profit in bull and bear markets. So this is absolutely free to you, right? I wrote this guide. It's about how many words is this? I think about 6,000 plus words, right? About 50 pages. So hopefully this would, really give you the essentials and understand, what trend following is all about. So with that, right, I've come to the end of this week's market analysis. If you have any questions, don't hesitate to let me know. With that, I wish you good luck and good trading. Talk to you soon.